Hey everyone, thank you so much for joining us. This is Sasha with Midland, and I will be the webinar host today. I will be accepting questions during and after the presentation. I would like to go ahead and address one thing in our area. We have been experiencing some spotty connectivity to the internet. So if you lose sound and audio, first try to refresh the page. And then if you would just give it a few moments while we work on logging back in. If we do go black for an extended period of time, we'll make sure that we record the webinar and email it out to everybody. So seems like the connection is good and strong now. So we're going to go ahead and start. But again, just if you're experiencing any issues, please try to refresh first and then maybe just wait a minute or two while we get back on. All right, so I am very excited to announce that we have a guest today, Olivia, and she's going to be speaking on the benefits of using property management. Before we dive into that, and Olivia will be accepting questions later in the presentation as well. So I am going to just do probably a recap for a lot of you with rental properties, and for anyone new to real estate in the IRA, you might learn something. So I'm going to go ahead and begin with an introduction to Midland. We do not give investment advice. We do not endorse any products. The purpose of today's webinar is for education. So while we love Olivia and what she does, we brought her on as a professional in her field, and she is going to educate you on the benefits of property management. We are not fiduciaries, so we are not giving any tax, legal, or financial advice. Please always consult with your attorney, CPA, or other advisors. And just a little bit about Midland. We are a self-directed IRA administrator and custodian. We'd like to remind you we are also a 1031 exchange qualified intermediary. Our main offices are in Chicago, Fort Myers, Florida, that's where I am, and Sioux Falls, South Dakota. We don't earn commission, we don't sell investments, it's your choice, and most of us here, or several of us here, are certified IRA services professionals, including myself, and it's part of why I love doing these webinars, because I really love to offer education to our clients. So jumping into the important rules about rentals in an IRA. So we are talking today specifically about a rental property. So the title to the asset is always going to be in the name of the IRA plan or IRA owned entity. So that might look like Midland Trust Company as custodian, FBO, your name and your account number, or maybe you have an IRA LLC, or perhaps there's a joint venture in place, but we're looking at the IRA plan or LLC for this presentation. That's who should be titled to the property. Percentage of ownership should be 100%, or it can be a partial percent. So if there's a tenants in common situation where there's more than one owner, then you would just want to make sure to designate those percentages. There is no personal use, no vacation use of any property held in your IRA. These properties are meant to be an investment purchase only. Income and expenses should never be personally collected or paid. No prohibited transactions or parties. So a bit more into that. Just as a reminder, this is what your prohibited parties look like. So starting in the center, you have yourself, the IRA holder, and your spouse. You're going to go up the family tree to your parents, mom and dad, and then your grandparents. Those are disqualified. And then when you go down the family tree, you would have your children and their spouses, and then your grandchildren and their spouses. Now, I do want to point out that it doesn't mean that you cannot partner with these parties And if you have questions about that, I'd be glad to address them outside of the webinar. You can partner with these persons, but you cannot pay them to render services. You cannot sell to, you cannot buy from. That's the gist of this graph. What's really important for you to know when you're going to buy an investment real estate property in your IRA, do not drain the account when making the purchase. You do need to leave a cushion at the very least to cover any unexpected or even expected expenses, the tax bill on an annual basis, and regular upkeep. You just want to make sure that you leave some in there to take care of anything that comes up before the income is able to support those expenses. The account holder is responsible for making sure the tax bill and other expenses are paid. It is very important to make sure that the county has your mailing address for the tax bill. If it gets sent to Midland, we do have a process to forward that to our clients. In my experience, the mail is not always the most reliable. So it just, if it gets sent to us and we have to send it to you, it just opens up room for error. Just make sure that the county has your address so that you're getting the tax bill. There is no sweat equity, and we are going to talk a little bit more about that further along. And if ownership is split, income and expenses should always be divided pro rata. As an example, if your IRA owns 70% and another partner owns 30%, then the tax bill should be split 70-30, and any income should be split 70-30. So sweat equity can be described as any physical activity that improves or adds value to the property that's performed by the owner. But really any physical activity. So mowing the lawn is technically sweat equity, and you as the IRA owner should not be performing those duties. Also prohibited is IRA owners or other disqualified persons. They should not be paid for performing services. So if your son has a lawn business, you cannot hire your son to cut the grass. I do want to say desk duties are not considered prohibited. I would say this could be something like signing a lease, putting up an ad that you're looking for tenants. Please consult with your CPA or an attorney when you're ever in doubt for what might be considered sweat equity versus desk duties. When collecting rent, again, it's going to be payable to the IRA plan, or as we mentioned earlier, the name of an LLC that is owned by the IRA. Payments cannot be deposited by the IRA owner. So if your tenant gives you cash and you deposit that into your checking account, you cannot then send that payment to the IRA. One, it's going to look like a contribution, which has its limits. And two, when you deposited that cash into your checking account, you have performed a prohibited transaction. So please do not accept cash. If your tenants don't have a bank account, maybe consider asking for a money order, or as Olivia is going to discuss with you later, the benefits of using a property manager for collecting rents. Paying expenses, they need to be paid for by IRA funds, whether they're transferred from another IRA, contributed to, or investment income. The IRA owner cannot be reimbursed for any expense. So not only is it prohibited for you, the account holder, to purchase an item, if you do, you will not be reimbursed. Here's just an example of some approved expenses: repairs and the materials, appliances, furniture, blinds, the homeowners association, property taxes, construction, and improvements. So expenses directly related to the property itself. Unapproved expenses, travel related expense, gas, flights, hotel, etc. You may want to consult with an attorney or a CPA about any questionable expenses for your rental property. So if you do have a property that is outside of the state that you live in, you are, of course, welcome to bring yourself into town to take care of some certain desk duties, as we talked about, or you probably are going to want to have someone managing that property for you. So at this point, I am going to take some questions just related to what I presented, and I'm going to go ahead and address, Jean, does prohibited parties change if you get married after doing a deal together? That is a great question. So a significant other, a domestic partner or a girlfriend, boyfriend, they are not considered a prohibited party. If you get married, you'll want to speak with an attorney or a CPA, but I think it is best practice to try to find a way to separate that person who's now your spouse from the investment that's in your IRA. And Scott, great question. Are siblings prohibited parties? Siblings are not prohibited parties. So you're going to take yourself at the center and your spouse, and then any lineal ascending relatives and lineal descending relatives are prohibited. So brother, sister, aunt, uncle, cousin, niece, nephew, those are actually all acceptable parties. However, those parties still are expected to pay fair market values for, if they're going to rent the property, they need to pay a fair rate. And if you're going to buy from them, your IRA needs to pay a fair rate. So fair market value involved. And Cheryl, I can reach out to you directly about partnering with disqualified people, but basically you keep your interests separate. So it's separate percentages, and you want to keep those percentages separate on all expenses and all income. You can never buy or sell between those disqualified parties. So if you partner with them, you could not, your IRA could not buy out their share. So you're locked in. So for right now, and I'm sure more questions will come in, which is absolutely fine. We will have room after the presentation as well. I think we're going to move forward with Olivia's part of the presentation. And give me just a moment. I need to switch over between our presentations. And I am going to go ahead and let Olivia take it from here. Thank you all again.
All right, thanks, Sasha. So hi, everyone, and thanks, Midland, for having me today. So as Sasha mentioned, I will be going over 5 reasons why you should hire a property manager. Okay, so if you think you might know any of the answers, feel free to write your guesses down in the chat box. All right, reason number 5 is vacancies and leasing.
Going to leave just a little extra time here if anybody wants to put in their guesses. And Olivia is going to touch on each and every point. And I'll go ahead and take this opportunity while you may be putting in your guesses for the 5 reasons and address just a couple more questions. So Carlos said, can I invest solo 401k from another company and Midland IRA? Carlos, as long as that 401k plan will allow you to invest in alternative investments, you'll have to check with that plan. But yes, your Midland IRA can be part owner and another retirement plan can be part owner. Again, you'll just have to make sure that they allow alternative investments. And Maggie, about being locked in, thank you, but I can reach out to you directly as well. But if you're going to partner with someone disqualified, you can't transact with them. You can't buy and sell from someone disqualified. So what you're going to have to decide upfront what percent your IRA holds and what percent the disqualified party holds. And so you're locked into those percentages. Your IRA cannot later go buy from that disqualified party. And it does look like we have some guesses coming in. So Olivia, we have someone guessing inspections, someone saying timely rent collections, and then evictions. So I think that those are all great guesses, and we'll go ahead and move forward now.
Yes, those were all great guesses. All right, so number 4 is property maintenance. Reason 3 is evictions and other legal issues. Reason 2 is increasing your revenue. And the last reason is the stress of being a landlord. So let's dive deeper into all of these. Okay, number 5, setting the right rental rates. While looking through the classifieds to see what other landlords are charging for similar properties is a fine way to ballpark your rent price, a good property management company will conduct a thorough market study in order to set a rental price for your property, ensuring that you achieve the perfect balance between maximizing monthly income and maintaining a low vacancy rate. Property managers also have the resources to answer leasing inquiries quicker, show homes faster, and thoroughly screen all applicants while staying compliant with local, state, and federal housing laws. Faster processes equal fewer days on market, which result to more cash for your bottom line. All right, reason number 4, a property manager handles maintenance. When you own a rental property, your tenants call you for any number of repair or maintenance issues. Sometimes these calls happen in the middle of the night, even if there's nothing you can do to handle the situation right then. With a property manager, those worries are not yours. Your manager will get the call. Also, hiring an experienced property manager ensures they have a network of vendors and repair professionals to handle repairs and maintenance economically and effectively. A streamlined maintenance process also ensures tenant satisfaction, resulting in a higher likelihood of tenant renewal year after year. Number 3, property managers know the laws. How much do you know about the laws that apply to being a landlord? One of the biggest advantages to hiring a professional property manager is the ability to avoid some legal hassles. With a full understanding of all the state, local, and federal laws when it comes to discrimination in screening and selecting tenants, property managers avoid breaking discrimination laws. In the event that an eviction becomes necessary, an experienced property manager will know how to handle it in a way that will save you time and money while staying within the boundaries of the law. Number 2, you'll make more money with a property manager. Many property owners are afraid to hire a manager because of the cost involved, not realizing they will actually make more money in the long term due to the increased care of the property. Your manager will be sure your property is priced competitively. They'll also be skilled in marketing the property at appropriate times, for example, as soon as a notice of vacancy is given, and on the right channels, which will include Zillow, Trulia, Facebook Marketplace, or Craigslist. You will get better tenants that stay longer and have less damage and repairs to deal with. And the last one, property managers will save you lots of time and headaches. Do you know how much time it takes to be your own landlord? Could you be making better use of your time? It can be a full-time job to track rent payments, collect late fees, deal with complaints and repairs, prep the property for new tenants, find vendors, and deal with bad tenants. It may also become a constant source of stress for you. When using a property management company, a property owner is able to keep a professional distance from their tenants. Getting too personally involved can result in being too lenient on certain issues or too defensive about certain types of complaints. Renting out a property is a business, and it is much easier for a property manager to keep things on a strictly professional level. Relinquishing these ongoing responsibilities to a good property manager can allow you to benefit from your investment without sacrificing your time and your health. So with all of that said, I'm going to leave you with one last question you should ask yourself. Can you decline an applicant for having a criminal background? And what form are you required to use to inform applicants of the decline? I'll let you guys think about this answer. And if you have a guess or you'd like me to answer that, feel free to ask it in the questions.
Okay, thank you very much, Olivia. So today's presentation, we did keep it a bit brief because it's just one concept of investing through your IRA, which is just essentially managing your property. We wanted to offer this resource to our clients just so that they knew what their options were. It can be intimidating, especially when you're new to self-direction, but there are options to assist in keeping keeping yourself from crossing any lines where you are going into self-dealing, prohibited transactions. Of course, our representatives at Midland are always available throughout the week to answer any questions that you may have. So I think, Olivia, if you want to go ahead and answer this last question, it's certainly not, something I'm familiar with, so I'd be interested to hear.
Is it by Mark? Can I pay taxes on a percentage of my investment to allow me to use the property?
No, I'm sorry. The question up on the screen, can you decline an applicant for having a
Oh,
criminal?
I'm sorry, that question.
Yeah.
So that's kind of a trick question. You cannot decline applicants for certain felonies, as well as anyone who has a criminal history of 7 years or older. And then the form that you are required to send applicants that are declined is the adverse action letter.
Okay. And we did have Jean with a very good guess. You can decline if it's within, she said she thinks 8 years. So that sounds like she was pretty close.
Yep.
So here's Olivia's information. If you have any more questions about property management, specifically for her company here in Fort Myers, and I am going to take a few minutes just to answer some other questions from our clients. So I'll answer the question about taxes. Can I pay taxes on a percentage of my investment to allow me to use the property? So unfortunately, even if you partner with the property, even if you own the majority over your IRA, there is still never going to be personal use on the property. So where the IRA is involved, absolutely no personal use on that. So if you share ownership with your IRA, the IRA has to pay its part in taxes, and you have to pay your part in taxes. If you're referring to property taxes, of course, now it is possible with certain factors in place to remove the property from the IRA, removing its tax sheltered status. There may be paying federal taxes involved, and at that point, it's your property. It's not in the IRA anymore. And yes, now you can have personal use. John, do I need property manager for undeveloped property? John, I don't know what sort of management you don't need. I am going to be honest. You're not required to have a property manager. You just want to make sure that you're not out there doing any sweat equity. You want to make sure that there's not going to be any collecting of rents on undeveloped property. You are going to have to pay, if you're planning on developing the property, you're going to have to pay contractors who come in to do the construction. You may want to use a property manager for that, or there's the option just to pay them directly from your IRA. Or if you feel like you are savvy, you can keep good records and comfortable with doing some accounting, there is the checkbook LLC option as well. And it looks like Olivia answered the question about being nationwide. And yes, this webinar is being recorded and is going to be emailed out to everyone who registered. And we're going to make sure that everyone receives that by email. And you can always reach out to Olivia directly or anyone at Midland directly as well. Can I transfer, Victoria asked, can I transfer an existing IRA owned property to a checkbook LLC? Victoria, yes, you can. It involves a quit claim deed, and there would be a transaction fee. So if you'd like to call our office, we can discuss that in detail. what are the tax reporting requirement for an LLC owned by an IRA. Midland, as your custodian, Maggie, does the tax reporting. LLC manager, you need to provide us with a fair market valuation update every year. So if you're holding properties, we would like to see tax bills. If you're holding any cash in the operating account, we'd like to see a bank statement. So you report the fair market value, and Midland, as the custodian, does the reporting for you. Cheryl, can we mix a home and metals under the same LLC? Yes, you can diversify within one LLC. That is a possibility. Dirk, how do you find and select a property manager or firm? Looks like Olivia's answering that for you. I just want to make sure I don't leave anybody out, but if I need to, if I miss anyone, I will be able to see who submitted questions after the fact and reach out. And I really appreciate everyone being so interactive. Again, I really enjoy doing these webinars and appreciate everyone's attendance and questions. Stephen, does an LLC send a K-1 to the IRA the same way it normally would if owned outside an IRA? If you are part of a multi-member LLC, if your IRA is a member, then that LLC manager will probably provide you with a K-1. The K-1 just reports income and not valuation. So we don't accept K-1s for fair market value purposes. And Cheryl, you can own an unlimited amount of homes and assets in the IRA, as much as your plan will allow you to purchase. Again, making sure that you have a cushion for each asset. You can pay for administrative fees out of pocket, but expenses directly related to a property in an IRA does have to be paid for with IRA money. And I'm just going to, I think we're just going to wrap up here today. So thank you for joining us for this quick webinar. Again, I love that everyone was so interactive, and thank you, Olivia, for joining us.
Thank you for having me.
Absolutely. We really do appreciate it. If anyone has any questions for Olivia, you can reach her at her contact info here on the screen. And those of you who registered for our webinar, you should know how to reach Midland. And thank you again. Very much appreciated. Hope everyone stays well and stays safe.
Everyone for being on.
Thank you.